Hey everybody, Gary with Basecamp Trading. Let's take a look at a subject that they get brought up a lot, and that's the use of moving averages. Now there's lots of different ways people use moving averages, but on some of the higher time frame charts, let's take a look at how I use the 50 and the 200. The 50 and the 200 on these higher time frame charts very often act as significant support and resistance lines. And here's an example: bonds. Bonds today pushed up, ran right into the 50 EMA and stopped. Pushed up, banging into the 50 EMA right now. Pushed up, stopped at the 50 EMA. Pushed up, stopped at the 50. Same thing here. Up here, you had resistance at the 50, and then here, the 50 was support. You can see bounced off it here, underneath it, back above it, underneath it, back above it, close underneath it here, underneath it, back above it, and then look, 200, same thing. Ran right into 200, pulled back, into the 200, pulled back, into the 200, pulled back, off the 50, off the 50, off the 50, off the 50, under, back above, resistance, kind of chopped around it, support, resistance, support, resistance at the 200, resistance at the 200, resistance at the 200, resistance in the zone. You can see, yeah, you're breaking above it, but look, it's closing underneath it over and over. Above it, close under it, above it, close under it, above it, close under it, above it, close under it. Significant resistance. And you can just go through these charts over and over and find that when price is in these zones, these are areas of significant support and resistance. What's the value of that? The value of that is if you're looking to take long trades into these zones, you know that the probabilities are very high that these are going to be resistance zones. So you may want to consider either passing on that trade, taking quick profits, running tight stops, because again, we know that there's a high probability that price is going to react at these zones. Now, eventually they have to get through them. Price never goes straight up, never goes straight down. So at some point in time, they are going to get through them. But you can see that just over and over, the 50 and the 200 on these higher time frame charts act as significant support and resistance areas. I mean, look how many times you're banging off the 200 here, and here. Support here. I mean, just over and over, you can see that price reacts at these levels. And so again, there's lots of different uses for moving averages, but on these higher time frame charts, I find that the 50 and the 200 act as significant support resistance. Here's a 30-minute chart. Same thing. You can see this morning the ES just chopped around the 50 and the 200 right on top of each other. And you can see just up and down, back and forth right at the 200. Significant price reactions at the 50 and the 200. And then you go through here and you can see, look, support, resistance, right in here, resistance, support. And then look at all the support. You just bounce off these EMAs. And again, that's useful because when we are making trades and entering trades, we know that when we're in these zones that there's a high probability that price is going to have a reaction. So we may want to wait until we clear away from this. See, once we break and then we start in a trend away from these zones, these are the areas that we want to trade. We don't want to be trading right in here when price is close or when price is on top of that. We know that the probabilities of our trades working out are reduced because we know it's reasonable to expect price reaction at those zones. But then when we get away from it, start trending, higher highs, higher lows, now above it, our long trades are working out nicely. And you can see just over and over how price reacts at these averages. But then when you get away from them, your trade opportunities and probabilities of success increase significantly. See how we got away from it, and now we started in a nice uptrend. Now our long trades are working out really well. When we're sitting right here at the moving averages, we know that price is reacting there. So just one way that you can use moving averages. Again, lots of different ways that people trade with moving averages, but on our higher time frame charts, the 50 and the 200 EMAs are significant support and resistance zones for me.